Hello, welcome back to class. This is the eighth module of the course Financial Accounting, and we'll be talking about ethics in financial accounting. Before we go into understanding the aspect of financial accounting, it is very important for you to know that for every profession, we have whatsoever guides their operations as a profession. We have things that actually guides the way they operate, the way they do things, and that is what we are set to look at. Today we'll be looking at what actually the meaning of ethics is and relating it to financial accounting. We look at the ethical responsibilities of accountants and the code of conduct and professional behavior, and we look at few case studies on ethical dilemmas that we may have. And I want you to follow as we go through the course. What is ethics in accounting? Accounting ethics is actually a feed of applied ethics and is part of business ethics and human ethics. The study of it's the study of the moral values and judgments as they apply to accountancy. So it's putting up human ethics, it's relating to human ethics and business ethics also, and also an applied ethics. And with that, it help in studying the moral values and judgment as it pertains to the field. And ethics in finance and accounting are crucial for maintaining trust and integrity within the financial industry. In financial sector, it is very important for you to put up a quality of integrity and then trust. Where these two are lacking, there will not be any form of trust, and whatsoever that is done will not be acceptable because there is no integrity or trust in such a person that did it. So it is very, very important. So it involves adhering to principles like honesty, integrity, objectivity, and confidentiality to ensure accurate and fair financial reporting. These actually are the principles that we know, and these principles are the ones that guide accountants and those that are related to finance professionally in making what we call sound ethical decisions, even when faced with challenges. Ethics also embodies the fundamental principle and values that direct the action and professional actions of professionals within an accounting domain. So we could see that they are fundamental principles and values. So we saw it as one that deals with principles, that deals with value also from this context, and it revolves around making principled choices, upholding transparency, and showcasing a commitment to maintain integrity. You see the word transparency there too. It is actually what will help people to trust and trust you, and we make an accountant to be known as a man of integrity. So it is very important to know that. Why do we say ethics is important? Why is ethics important? The first is it helps in mitigating legal risk and ensuring compliance. So it's a kind of a shield against legal risk and non-compliance with the profession, the professional dictates or standards that has been set down. So it actually helps accountants to adhere to regulatory framework and industry guidelines. The second one is preserving financial integrity and building trust. Just like I said the other time, ethics helps in order to preserve financial integrity and build trust, which is very, very key. And it's actually the bedrock of financial integrity and trust. Yes, ethics is a bedrock for financial integrity and trust. And this when this comes up, an accountant needs to actually showcase some principles that we will actually look at, such as honesty, objectivity, transparency, so that it's we'll be able to strengthen credibility of the financial information that is being provided. And where there are investors and stakeholders also, the issue of integrity and trust is very important. So that's why we need, or that is why ethics is important in accounting. Another one is preventing fraud and unethical practice. When we talk about ethics, it helps to prevent fraud and unethical practices. And when we talk about fraud, fraud is something punishable under the law. So when accountants commit anything related to that, such as embezzlement and manipulation of financial data, it's going to be it's going to be punished. So ethics guide against performing such, and that is why it is very important. The fourth one is that ethics helps in enhancing corporate reputation and image. So ethics in accounting significantly contributes to enhancing the corporate reputation of an organization. That is, when we talk about commitment to ethical accounting practice, it actually fosters a positive perception among stakeholders, clients, and investors, including the public also. And lastly, we have importance of ethics to be that it supports long-term sustainability. It's actually an integral part of bringing about a sustainable viability of such a business. So adhering to ethical standard ensure sound resource management, promoting financial stability, and reinforcing business operations sustainability. We have the principle, just like I have been saying, we have principles of ethics for accountants. And when we talk about principles of ethics, they are kind of the established rules or law that ensures that such an accountant is trustworthy and also has integrity. So it's an established it is established to ensure the integrity of and trustworthiness of the profession. Ethical principle in accounting serves as guiding beacons. They steer accountants in their daily operations, upholding the highest standard of professionalism within this section. We will be talking about 6 different foundational or fundamental principles and guides accountants in their operation. The first one is integrity. And when we talk about the integrity, it is known as the foundation of ethical behavior in accounting. And it suggests or puts it to an accountant that he must be honest, truthful, and transparent in all professional dealings. And by maintaining integrity, accountant builds trust with the client, colleagues, and public. The second is objectivity. Objectivity is essential for accountants to provide unbiased and impartial financial information. And it is necessary that an accountant base their decision on factual evidence. And that is when we talk about objectivity. This will help to avoid conflicts of interest that could compromise their objectivity. The third is professional competence. Accountants are expected to possess the necessary knowledge, the skill, the expertise to perform their duty competently. So a principle is being competent. It talks about being competent. So when you are competent, accountant will be able to provide accurate and reliable financial information to stakeholder. The next is confidentiality. It is very, very important in accounting. Confidentiality is a fundamental principle in accounting that ensures the privacy and security of sensitive financial information. If you will call yourself an accountant, you actually need to be confidential. Like you need to ensure privacy, and you need to secure every sensitive financial information. Every little financial information in accounting is very, very important. So you need to keep it safe against other people getting to know about it. Next is professional behavior. Accountants should conduct themselves in a manner that upholds the dignity and reputation of the profession. And the last is professional skepticism. It is the mindset of questioning and critically evaluating financial information. It is very important for an accountant to actually evaluate critically and question where necessary financial information that are provided in case of maybe auditing and whatsoever. So you need to exercise professional skepticism to detect potential error, fraud, or misstatement in financial record. So that is that about the 6 fundamental principles that we are talking about. We have ethical dilemmas in accounting, and this it involves the situation whereby an accountant faces conflict between their professional value and obligation, which results in making a challenging choice in performing their duties. And we have case studies of such. I may not be able to dwell on that. It's in your note and you can go through it, but I will just briefly talk on those dilemmas that we may have. I will just talk about a few of it. The first one is overstating stock to meet earning target. When it's time for a, an organization to increase the profits to let the investors actually think they are more profitable, they try to overstate their inventory. That's inventory to meet earning target. So a company may be tempted to inflate their inventory counts to make it appear more profitable. When this happens, actually, when the inventory is increased, it leads to the understatement of the cost of goods sold. And when this is done, it leads to a higher profit or net income. So this is an example of ethical dilemma. We have the case study there. The second one is conflicting information. This is when an accountant is actually asked to provide conflicting information to direct stakeholders and different stakeholders, potentially compromising their integrity. So this also is an ethical dilemma in accounting, where conflicting information is asked to be given to different parties in the organization. We have the third one to be pressure to compromise the quality of the work. An accountant may be faced with pressure from management or colleague to compromise the quality of the work to meet deadline or budget. So trying to quickly make offense to make sure that they meet deadline. So, and this can be a form of a junior accountant being assigned to complete a complex audit task within a very tight schedule. And when this is happening, it actually leads to a compromised quality, which is not okay in accounting ethically. The last one is disclosing confidential information. An accountant can be faced with this, where an accountant is asked to disclose confidential information to a third party, which could violate the professional obligation. Just like we've said, it's a principle in accounting that we actually have to be confidential. So an accountant may be faced with this to disclose confidential information to third party. And these are the necessary ethical dilemmas, or you can still get more from your notes, but these are the ethical dilemmas that we are talking about. So it is very important for you as accountants to know that you have ethics that guides your operation. When you don't follow this, it's punishable. It's punishable, and you may lose what you have been working for. So it's important for you to be ethically well behaved. That is what we are talking about today.